Normally, prices start to rise because liquidity starts coming back into the system. Then by summer, which is this year, which was 2020, liquidity starts to flow, prices start to rise, confidence starts to build, you start to make a lot of money. And then we go into fall or autumn. That's the final year of the cycle, and that's when things tend to go bananas. It starts at the back end of the summer season, which is now. So we've been starting to see bananas, price rises and all sorts of stuff. And then next year, we get the final swoop where everything goes exponential. The gatekeepers, the power brokers, the finance system always had the advantage over us. The Web3 companies, they took our data and monetized it. And here it's been given to us. It's like the internet's been given to us and we've got tokens to make us rich out of it. It's like that's what's happening, and we're broadening this wealth. I mean, we're only a $3.5 trillion asset today. I think we're going to 100 trillion in 10 years. So we're only 3.5% of the way along the journey. This is the biggest, largest redistribution of wealth in all history. It's underway.
One of Pal's recurring themes is the importance of a long-term perspective. He advises against making rash decisions based on short-term market fluctuations. Instead, he urges investors to think in multi-year time horizons, ideally targeting 2030 as a benchmark. This mindset helps mitigate the psychological toll of market volatility while maximizing potential gains. Pal emphasizes the value of diversifying and rebalancing portfolios. He warns against overexposure to speculative assets, such as meme coins, and advocates for a balanced approach that includes taking profits during peak cycles to reinvest during downturns.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
And that I've just called the banana zone because it looks like a banana on the chart and everything goes bananas. And it happens every 4 years. And it's kind of the biggest gift that we ever get given is this fucking thing. I remember Anson put out a post, I know it was in 2023, and he's like, I cannot believe we've been given this chance all over again. They give it to us down 75%.
Let us get away with it again.
And we do. It feels like a pre-programmed gift. It's really weird. And it works every time. Now, it won't work in perpetuity, but it will continue to work until we figure out a way of getting out the debt issue. If we think about one of the biggest complaints that we've had is like the gatekeepers, the power brokers, the finance system always had the advantage over us. The Web3 companies, they took our data and monetized it. And here it's been given to us. It's like the internet's been given to us and we've got tokens to make us rich out of it. It's like that's what's happening, and we're broadening this wealth. I mean, we're only a $3.5 trillion asset today. I think we're going to 100 trillion in 10 years. So we're only 3.5% of the way along the journey. This is the biggest, largest redistribution of wealth in all history. It's underway. It's all going to come down to liquidity, because liquidity is the dominant factor. What was unusual about 2021 was liquidity peaked early because they jammed it in 2020 and then they started taking it out. And it peaked in March. Normally, liquidity peaks in August, September, October, November, which is why the cycles are longer. So that's all I think we need to know is when does the business cycle peak? That's the other thing. I use the ISM survey. When that peaks, the market usually peaks around that. We haven't even got off the bottom yet. So we're still, the ISM is below 50, which means most of the economy is still not even really functioning yet. So we're a long way from this, but I understand people have PTSD, which is like the best answer for that is take some lifestyle chips off on the journey, but don't trade your whole bag and try and think in multiple year time horizons. Think about this 2030 time horizon. Say, listen, I've got to be in the technology. I'm going to have drawdowns. I'm not going to do stupid shit. I'm not going to be 100% in meme coins at the end of the cycle. You know, that whole don't fuck this up thesis. Just be sensible. Everyone will be fine. And if it does have a massive blow-off cycle, sure, you can take some more off. But, I just don't think trade the cycle. Well, don't forget the fractal is actually driven by the debasement cycle, the everything code cycle. So there's already a fractal that's in place. So then what we're saying is, do people do the same thing every cycle? Yeah, we're humans. We just do the same thing, which is like, okay, well, Solana's gone up a lot. What's next? But also the funding cycle of these massive blockchains means that in 2022, 2023, Sui, Celestia, a bunch of these guys raise a lot of capital. They're serious projects, so then they get developers and they do all of their kind of groundwork, building community, all of that. And then what you see is success or initial signs of success. They're still early, so you don't know, but the initial signs of success. And that's what builds momentum, because the more activity on chain, the more the value of the chain goes up. So it's all driven by something called Metcalfe's law. Metcalfe's law is how to value a network. And it's basically the number of users on the network and the total value transacted on the network. So some networks are lopsided. Doge is the most lopsided network of all, right? There's no on-chain activity. Nothing is built on it yet. Maybe X will be. But really, it's like there's a shit ton of holders. So that has this really weird, skewed Metcalfe's law valuation, but it works. Others, like ETH, have both. Bitcoin has a ton of value transacted because it's a very valuable network. So I look for that. And look for that, what goes on. It seems that people do that because it gets attention. If some activity is happening, we're just attention monkeys, and where attention flows, money flows.
Pal also explores the evolution of blockchain applications, from decentralized finance to decentralized autonomous organizations. He notes that what begins as speculative experiments often matures into mainstream applications. For example, NFT, initially dismissed as mere collectibles, are now being explored for ticketing, intellectual property, and brand valuation. Similarly, meme coins, while speculative, showcase the potential of tokenized communities. By aligning financial incentives with cultural and social movements, these tokens represent a new form of value creation and capital formation.
I realized that this was probably the biggest opportunity of all time, which is, I'd reached that conclusion in 2013, but what I realized was everybody's future was so fucked, particularly the millennial cohort, because property prices were too expensive, they were working 3 jobs, the S&P, the markets were expensive, so their future expected returns were terrible, unlike their parents. And I realized, well, this is the one way to unfuck your future, was like, we've been given a gift. It's like a literal gift to humanity. You can complain all day about how shit your life is, but here it is. And it's a globally homogenous, fractionizable asset that works in Bali as it does in the Cayman Islands, as it does in Nigeria, as it does in New York City. We've never had that before. And so everybody, because it's fractionizable, everybody can put 10% of their paycheck in. So you don't get left behind. Because what was happening, the debasing of currency to pay the debts on after the financial crisis, all the massive debts, we keep rolling them, and it requires more interest payments, and they have to keep debasing the currency. So it makes the assets go up optically. Well, really what's happening is they're devaluing the currency. And so everyone's just getting poorer and poorer without realizing it. People are getting angrier, and politics are getting more polarized because everyone's blaming each other. It's like, it's their fault. When the fact is, the fault was having too many baby boomers that competed with each other for labor, investments, all of this shit. And so I realized this was the one asset. It's doing 150% a year on average, including drawdowns, massive drawdowns. I'm like, this is it. I mean, this is the one. So I've really tried to explain to people why it's so important to them. We're using speculation to create capital formation. That's what financial markets are. This is just a racier version, right? But that's what all capital markets are. So we're creating capital formation, and the DeSci. I mean, I talked about it in the last cycle and said this is coming. This is a way of getting people together. A DAO is a structure by which you can get together scientists under a financial incentive structure. You could have a token. So we talked about it, didn't happen. Now we're seeing the early stage. By next cycle, it'll be the main thing. And we see this every time. Like I've talked about NFTs for ticketing. We talked about it last cycle. We've seen some people launch this cycle. By next cycle, it'll all be NFT tickets. It just takes time. But what we're doing is testing capital formation ideas in all sorts of ways. You know, one of the things we're looking at Real Vision is tokenized crowdsource asset management. We're a hive mind. We're all grinding, trying to stress test our ideas, form communities, do stuff. In the end, we've all done pretty well from being part of this big community. And we can completely destroy the asset management industry by decentralizing it. So there's a lot of ideas that get tested. I mean, you know, the big thing for meme coins for me is something I was involved in from last cycle, which is social tokens. People didn't really understand it yet. Part of it is like intellectual property, brand, and culture doesn't appear on a balance sheet of a company, so it's not really valued. Like Disney, like it's like a $90 billion company. What's the cultural value of Disney? $1 trillion? $2 trillion?
Yeah.
But they haven't tokenized it. But tokenization allows you to tokenize culture and brand value and stuff like that, and it becomes a tangible on the balance sheet, not an intangible. So I've had this thesis for a while, and this is what meme coins are, is the ability to create community money and incentive systems around a commonality of purpose. So we're seeing like DeSci is some of that. We're seeing like things like Forest, which is now a charitable thing about regenerating woodlands and forests. It's this, how do we coalesce a group of like-minded people with a like-minded idea and inject capital into it? I think it's going to, when we get to an AI world and we're all sitting around thinking, what the fuck do we do here? We will find that doing what you and I do, which is being part of communities, pays. I mean, it does pay already because, you know, community is what giving us some alpha.
Pal connects these developments to a broader economic narrative. The relentless debasement of fiat currencies, driven by unsustainable debt levels, has eroded purchasing power and exacerbated inequality. Blockchain technology offers a solution by providing a globally accessible, deflationary asset class. He likens this shift to a gift, a chance for individuals to unfuck their financial futures. By investing consistently and avoiding emotional decision-making, anyone can participate in this wealth creation process.
Please like and subscribe my channel.